Hi traders, in this tutorial we're going to look for high probability setups. We're looking for 3 or more reasons to enter a trade. We're going to be using price action techniques, candlestick patterns, reversals, Fibonacci extensions, retracements, stochastics, and previous support and resistance levels. So let's get started. This is a gold chart on a 4-hour. So let's look for reasons why we should take a trade going north at this particular area. So let's look at, this is a stochastics indicator, and I notice that stochastics at this juncture is oversold. So let's look for some more reasons. That's number one. Number two, here is a swing low that was broken. So I would draw a fib from that swing low up to the swing high. And I notice that price stalled out at the 161 extension. That's number two. Then I look for a fib from this swing low and I draw it all the way up to the same swing high. We have overlapping fibs, an extension, and a 50% retracement. So we have 3 reasons to take a trade. And let's see if we have any more reasons. Notice these levels, these previous resistance levels here. Remember, when a resistance level is broken, it becomes support. So there we have 4 reasons why this trade is valid. Now there's one more. Let me just remove all this noise because then you're not going to be able to see it. Is that we have divergence. This is a swing low. This is the other swing low, and notice that the swing lows are slanted down. We have a swing point here, a swing point there, slanted down. But on stochastics, these wave patterns are slanted up, and this is called divergence. Just highlight it so you can see that this whole area, it won't extend down to the stochastics, this highlighted area, but you can see from here to here, price went down, but printed lower, but stochastics wave patterns went up. So that is called divergence. Where we would enter a trade, I would have ideally liked to have entered a trade at the extension down here, even before I saw the divergence setup. But we could have entered a trade after the close of this candle going up. Let's see how many pips, just curious how many pips this thing actually went up from this level. 474 pips to the, well, actually 405 pips to the previous resistance levels. Let's look for some more setups. And here's a trade that I actually executed. I got in a bit late, but the trade is still valid. We have stochastics is oversold. That's number one. Just highlight this area. Number two, we have this whole pattern here. We have an inside bar followed by this long, these are inside bars right here. This is the mother candle with inside bars. And then we have this long kangaroo tail that tried to break the swing low but closed above the low of any of these candles. Actually, this is called a fakie, and your entry would have been on the next candle. I got in a bit late on this trade, and I'm currently up on gold a few dollars. So let's count the reasons. We have 1, stochastics oversold. 2, we have a kangaroo tail that was printed. 3, it was also a fakie because it penetrated the mother candle but closed inside the mother candle. And I'm just going to throw in one more, 4 reasons. We have a swing low back here, and I draw a fib from the swing low to the most recent swing high, and price stalled out add in extensions. So that's 4 reasons to take this trade. Okay, let's explore, see if we can find some more setups. Okay, we found another setup. This is the Canadian yen pair. So let's count. I'm looking at this level here. So let's count the reasons why we should take a trade going north there. Number 1, stochastics is oversold. It's below the 20 level. Number 2, we have a bullish engulfing candle or a big shadow. That's 2. Number 3, we have a color change candle. I should zoom in on this, shouldn't I, so we can see this better. Just bear with me. There it is. Okay. We have more than 2 red candles going down, and then we have a color change candle that also happens to be a big shadow bullish engulfing candle. So that's 3 reasons. Let's look for another reason. So far we have stochastics oversold, which is 1 reason. Number 2, we have a big shadow or bullish engulfing candle. That's 2. Number 3, it's also a color change candle after 1, 2, 3, 4, about 7 bearish candles going down. So that's 2 reasons, or 3 reasons. Now I'm looking for a fib that would help me. So here's a swing low that was broken. So I draw a fib from the swing low up to the swing high, most recent swing high, and price almost to the pip stalled out at a 261 extension. That's 4 reasons. Excuse me. And then it also happens to be a previous support level. Not quite, because it did penetrate that level, but around this area, this is a very strong support level. Didn't quite get down to that level, but it came close. So there are your 4 or more, or 3 or more reasons to take a trade. Let's look for some more setup. Here's another trade setup, but I actually had to zoom out so we can look at 2 months of activity. And I'm looking at this level here. So the first reason is stochastic is oversold. Number 2, it printed a color change candle, but before I go into that, let me just show you first, because I'm going to have to zoom in so we can see the color change candle and another reason. So number 2 is this is a previous support from June 7th, and this trade setup is July 23rd. So over a month there was a support that was respected. So that's 2 reasons. Number 3, here's a swing low. I draw a fib from that swing low all the way up to the swing high. Price came down to 61% extent fib retracement level. We have 3 reasons. Okay, let me just remove that fib. So far we have 1 reason, 2 reasons. First one is stochastics oversold. Number 2, price stalls out at a previous support level from a month ago. Number 3, we have a fib retracement from the swing low from June 7th to the swing high of July 4th. That gives us a fib retracement of 61%. Okay, that falls exactly in the same support level from June 7th. And then there is one more fib, and this was an extension where I drew a fib from the swing low here, which was breached all the way up to the swing high, or the previous swing high, from this swing low to that swing high. And we have an overlapping fib of 161 extension on top of the 61 extension, 61 retracement. Now what we're going to do is let me just first highlight it the price so I don't lose it. So we're going to zoom in and see what candlestick pattern is at that level. So here it is. We have 3 bearish candle followed by a color change candle, which is our alert, and that's our trade. Okay. Here's another setup on the same pair. So we're looking at these levels here. So let's count the reasons why we should take this trade. Number 1, stochastics oversold. Number 2, we have a color change candle, which is our sell trigger right there. Here's our second reason. Number 3, it happens to be a previous support level from a week ago, which is here. So we have 1, 2, 3 reasons to take a trade. And then finally 4 is that we have a big shadow bearish bullish engulfing candle, but this would have taken your entry a lot later. You would have to enter a trade here. We do have a morning star candlestick pattern right there. Let me just remove that, you can't see the candles, but this combination of candles is a morning star. So that's a very common reversal pattern right there. And let's see how many pips this went up. So if you, let's say you just were late on this entry and you didn't see these levels, but you did see the morning star, your entry would have been here. Initial target was 148, because that was the previous resistance level, and then it went all the way up to 190, almost 200 pips. Okay, let's look for some more trades. Okay, here's another setup. I like these better because they're trend continuation patterns. A price just prints, sells off, and there's a retracement, and then the price resumes its trend. So let's look at the reasons why we should take a trade at this level here. Number 1, we have stochastics overbought. Now we're looking at a 4-hour chart, still on a 4-hour chart. Number 2, we have a color change candle. Number 3, let's see, we draw a fib from the swing high all the way down to the swing low. Price stalls out around 50% retracement level. That's 3 reasons. Let's just remove that fib and look for a 4th reason. Here's a swing low that was breached. So we're going to draw a fib from the swing high, to the swing low, and price stalls out at 261 extension. So 4 reasons to take a trade. Let's draw the other fib. Here's a swing high to the swing low, and there's overlapping fibs, an extension and a fib retracement at a 50% and 261 extension. Stochastics overbought, and we have a color change candle. So many reasons to take a trade. And these are high probability setups. If you don't have at least 3 reasons to take a trade, don't take a trade. That's my rule. Thank you for watching this video. Talk to you guys soon. Bye.